Hello and welcome. I'm Chinmoy and today I'll be presenting on the topic of decentralized virtual currency. This presentation will be divided in five broad categories. First, we will start off with an introduction. Afterwards, we will look into the evolution of money. We will then follow the rise of decentralized virtual currencies. Then we will analyze its pros and cons. And finally, we will conclude our presentation. Now then, let's start with an introduction. Decentralized currency is a type of currency that is held within a distributed network. It is kind of like a digital token, but unlike traditional digital currencies, this is not issued by any central banks. Moreover, no central authority have any control over the production or distribution of decentralized virtual currencies. But due to that, this currency is prone to wide fluctuation in its actual value. With that out of the way, let's now look at the evolution of money. Before money existed, people used to trade using the barter system. The system requires at least two parties, and for them to trade, they have to have a double coincidence of wants. What that means is, let's say we have two farmers, one an apple farmer, the other one a chicken farmer. If so, a chicken farmer can then only acquire apples if the apple farmer wants some eggs or chickens. As we can see, we will run into troubles with this system if the apple farmer simply doesn't want any eggs. Now, this problem could be solved theoretically using what we call the multilateral barter. In this, there are multiple parties present at the same time and they trade their goods in a circular fashion. However, this system is clumsy, inefficient, and extraordinarily complex. To solve all these issues, we use money. Money allows us to transfer purchasing power from one transaction to next with the absence of a double coincidence of wants. Now, in human society, money serves three functions. First, it is used as a medium of exchange. That means the people or the parties who want to trade their goods don't have to be present at the same time at the same place. They can simply use money as an intermediary to trade their goods. The second purpose money solves is to act as a unit of account. It tracks basically what people have produced and in how much quantity they have produced. Thirdly, money acts as a store of value. So instead of actually storing material goods in their house, people could simply exchange them for money and store it in bank account, and that will serve as a proof that they have value. Now let us look at some of the monetary policies. The first and the most popular one is gold standard. In this standard, the country derives its currency's value from the gold reserves it has. A country that uses gold standard sets a fixed price at which it buys and sells gold. As a result, the value of its currency is fixed in the international market. One more of the appeals of gold standard is that it restricts the central authority and prevents it from flooding its own market with its own currency. As a result, hyperinflation is avoided. As of now, none of the 200 countries use this gold standard. In the last decade, they have switched to another monetary policy, which we will see next. This is called the fiat currency. Fiat is a Latin word that means let it be. As a result, a fiat currency derives its value from the central authority, that is the government that issues this currency. This currency gives the central banks a lot of power at how they can distribute and create money. This gives them a lot of control over their own economy. Most of the paper currencies right now, like the US dollar, Chinese yuan, Japanese yen, and Indian rupees, are fiat currencies. One of the most dangerous aspects of this fiat currency is that Too much printing of it could lead to hyperinflation, like we see in Venezuela or Zimbabwe, where the inflation rate was more than 200%. Now let us move on to the decentralized virtual currencies. Virtual currencies, as said before, are basically digital representation. In broad sense, there are two types: centralized currency and decentralized currencies. In centralized, they are issued by banks, whereas in decentralized currencies, they are free from anyone's control. They are used as a means of exchange and can be transferred, stored, or traded electronically like traditional cash. These virtual decentralized currencies make use of peer-to-peer system. These systems are basically interconnected user-operated nodes. These currencies are mined by using these so-called nodes by solving complex mathematical equation called hashes. Unlike traditional cash or digital tokens, these currencies have totally open flow. Nobody could control it, nobody could block it. They derive their value solely from users' transaction and not from the banks. Now let us look at some of the most popular decentralized currencies. First on the list is Bitcoin. It was launched in 2009 by an unknown person or a group of persons by the name of Satoshi Nakamoto. This currency is created, distributed, traded, and stored using a distributed ledger called the blockchain. As of now, this is the world's largest cryptocurrency by market capitalization. In history, Bitcoin's value has been really turbulent. It started trading at a mere $1 for one Bitcoin, but by 2017, it had reached the value of $20,000. So it is kind of unstable. Let's move on to our next candidate. It is Ethereum. Unlike Bitcoin, Ethereum is a complete open source computing platform and an operating system. It is also a programming language which is Turing complete that runs on a blockchain. This platform helps other developers create distributed apps, not only financial apps, but all sorts of apps. It also has a decentralized virtual currency called Ether. Right now, the biggest project around Ethereum is Microsoft partnership with Consensus. Apart from those two, there are other popular decentralized currencies like Facebook's Libra, Litecoin, EOS, Tether, Monero, and Bitcoin Cash. These are the most popular ones. Of course, there are other hundreds of currencies created on a daily basis. Now let's look at all the benefits and risks associated with decentralized virtual currency. The first benefit of decentralized currency would be that it is a bankless currency, totally free of any national monetary policies. For residents of countries that have turbulent fiat currencies, a decentralized currency can serve as a stabilizing agent and an alternative. These decentralized currencies are immune from bank failures and collapses, as well as exuberant bank fees and aggressive bank policies. The payments using decentralized currencies are completely borderless and couldn't be blocked by any authority. Their fees of international payments is very low, and their limits are very high, unlike the traditional banking. Decentralized currencies are also immune to inflation and deflation. The only requirement for using these currencies is the ability to obtain a wallet, which could be done cryptographically within 5 seconds. Decentralized currencies are also not subject to geographically based exchange rates. That means if someone buys some products using decentralized currency, then the product's value will be constant. It will not be reduced due to tariffs or other government policies. With all these benefits, there are some risks attached as well. The first is business risk. Since this is a new technology, there is a lot of speculation surrounding it. As a result, a business stands to lose money if they use decentralized currency. Moreover, the transaction speed is fairly slow. This could prevent businesses from acquiring and serving more customers. Then there are cyber fraud risk. Since these decentralized currencies are basically used as cash, they have attracted some bad actors. These people break into crypto exchanges or hack people's computer and infect them with malware to steal cryptocurrencies. The third is operational risk. These currencies are secured using cryptographic keys. If these keys are lost, then the account couldn't be recovered no matter what. Then there are regulatory and compliance risk. Some countries like India have made decentralized currencies illegal. If you trade using decentralized currencies in these countries, you could be heavily fined. Then there are market risk. Since there is a finite amount of decentralized currencies, it means that businesses could suffer from liquidity issues and limited ownership. And finally, there is energy risk. Decentralized currencies make use of powerful hardware to mine all the decentralized tokens. This mining process creates a lot of heat, and this could potentially lead to global warming. With all that said, decentralized currencies have actually rapidly evolved, and currently they are being seen as an alternative to our traditional cash-based economy. Bitcoin has emerged as a potential new form of money, which performs the function of money in an innovative way, and it doesn't rely on any central authority to facilitate transaction or confirming account balances. The absence of central authority has a lot of benefits, like borderless transaction, but it also has a lot of risk, like online fraud and illegal transaction. That being said, if mass consumer adoption becomes a reality, decentralized currencies application could revolutionize the way we bank, transact, and manage our assets. That's all with the presentation. Thank you.